at a new area called Tirana,
Sure. So you're
where
saying
the entire ecosystem is being built.
Got it, got it. You're saying business has come largely from the NRI segment. Your bookings have been in the range of around 2,200 crores on a quarterly basis. What does this take your average bookings to in the second half of the year?
The second half of the year, so quarter 1 and 2 have been about 2,200. This quarter will be, say, with this particular thing and the 2 launches, Panchkula as well as a commercial launch in Gurgaon, will take us to about 9,000 odd. We're yet to compile the data, but quarter 3 would be around that much.
All right. Hi, Akash. Morning. Nigel on this side. For the year, what kind of a number do you think you can end up with this sort of good response that you're seeing?
Well, right now, we've got a couple of things going for Q4. Nothing finalized, Nigel, at this point in time, but look out for this space. Yes, it's been, as I said, overall, the response has been pretty good.
You want to give us, Akash? Akash, you know, the numbers are looking so good. Luxury demand on ground is so good. Give us a broad band at least, you know, that we could work with towards the end of this year for FY24-25.
I don't want to speculate. We've done our guidance for the year. We've got a couple of projects lined up. We'll have to prepone them for Q4. But looking good. I just like to leave it at this point in time. But just one correction there. NRI has just been about 20-odd% of this entire sales. So 80% has still come from the rest of the country. I mean, primarily the NCR and the rest of the country. But these are also one more very important fact that I want to let you all know. Unlike the 5-10 lakh rupee booking amounts, this time the booking amounts have been 50 lakh rupees. No bulk bookings, one apartment to a family, and so on and so forth. So basically, the point I'm trying to make is these are retail and consumers, mostly people looking at moving in.
And which means drop-offs, etc., would also be much lower, right? That's an important point that you make. Akash, could you... so that point about the overall year, for the full year, could you give us a ballpark? What can we work with without getting into very specific numbers or anything? Because you look to, you know, it looks like you'll handsomely beat what you said you would do as a full year guidance.
No, so full year guidance, as you all know, we would have met by finishing of Q3 the way we did. So that guidance, I think, is done now. And now, as I said, there are a couple of other projects lined up for Q4 that I'd like to announce as we come close to that. But we are working on 2 big things. So just you know, let me leave it at that right now. But
could you be closer to 20,000 crores?
I won't speculate. I mean, our product pipelines are far greater than that. I'd see how much we can prepone, you know, bringing that in, because as you know, guidelines and regulations. I don't want to speak about products that are yet to be finalized and especially approved. But yes, I mean, we're excited with what we've done so far. We'd like to take one day as it comes.
Got it.
As I said again,
Akash, the street is also quite excited actually. The stock is up about 1.5%. Just before we let you go, is there a fresh launch, a new launch expected in this month itself, in the month of January?
Not in January, but definitely in the quarter, but not in January.
In the quarter. All right. We'll leave it at that, Akash. Thanks a lot.
Yeah. Thank you.
Sure.
Thank you.
Thank you for joining us. Well, that's DLF, clearly one of the big movers today. Demand is great in the luxury segment, but let's take a look at the market and some other stocks as well. The opening has been flat with a bit of a positive bias. The big movers this morning are Eicher Motors is up 1.5%. Titan, after the consumer update in the jewelry business, is up 1.5% as well. BPCL is up 2%. Oh, Sula, yes. So, we're talking about consumption, right? Whether it's buying gold jewelry, whether it's buying premium houses, whether it's spending on wine, everything is happening simultaneously in this market. So, Sula is up 11%. Big moves coming in there. There's, of course, specific news on that one. So, keep an eye out there. CLSA has raised their target price to 863 on Sula from 571 earlier. Remember, the Cabinet Ministry of Maharashtra has reinstated their subsidy on wines produced and sold in Maharashtra for 5 more years. and that should shift the focus to volume opportunities. So Sula looking pretty good over there, but many more stocks in the
Well, that's right. So, FIAM, their board will be considering a bonus issue. So, FIAM is up closer around 10% as we speak from the broader market. That's one of the big movers. So, just pull up the intraday chart out there. GMR Airports, you had a large trade that took place in pre-open. Delhi Airport as well had not paid revenue during COVID, and there's an arbitration panel that's ruled in their favor. So the stock opened up a little bit lower because of the large trade, but from there, GMR Airports has recovered closer around 5%. Low of the day is closer to around 18. But we had a few operational updates that came in there, and some of these stocks are getting a hard knock. Godrej Consumer is down close to 5%. Marico is down close to around 4% as we speak. Aarti Industries as well. On the global front, there is some bit of a pullback in terms of supplies going to Europe. And they supply, I think, a key raw material out there. So even Aarti Industries is a little bit lower. And Bank of Baroda post their operational update, that one as well is a little bit lower. What's doing well then? The OMCs are doing well. HBCL is up 3%. IOC is up 2.5%. Shriram Finance is up close to around 2%. And we had the management of DLF that sounded very, very confident about the end of this year. We can see luxury demand as well, very, very strong out there. Well, that stock is up close to around 2%. So the Nifty has flattened out. The Nifty Bank is the one that's underperforming. The mid-cap index as flat as can be, but individual stocks doing a thing of their own. Prashant.
Well, Sula's 20% in 2 days over last Friday, and what's happening today. So that's a very large move coming through on Sula. Just a few names on the downside. Bank of Baroda is down about 2.5%. Maybe we can look at these names as well. Stocks at about 228. Godrej Consumer, I think we highlighted 5% lower on Godrej Consumer. Yes. Marico is down almost 4.5-5% as well. So Marico is taking a bit of a knock, 521 on that one. There is Aarti Industries. Sonal was telling us about that one, 3% lower, 612 on Aarti Industries. ABFRL is down about 1.25%. I think we mentioned Inox Wind, which is down about 5%. India Cements, Gujarat Fluorochem, which is, the Fluorochem is down about 2% as well. And of course, the big winner from last week was Sobha, which starts a little softish this morning. Zomato is down about 1.5% as well. Stocks at about 131 at this point in time. So, that's the overall picture as things stand right now. BEML is another name I'd like to highlight, which is up about 5%. It's the other side. And there is Traxon, which is up 10%. So there are big movers on on the upside as well, apart from what we've already highlighted. Transformers and rectifiers is another one, which is up 6%, 281 on transformers and rectifiers coming through. And there's more. We'll come back to this. Blue Jet, recent listing, 4% higher, and so on and so forth. But volumes are a little lackluster. Nifty, after being absolutely flat, has picked up a little bit. We're about 35 odd points higher, 21,750 is where we stand. Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much for your time. January is, if you sort of look at seasonality, etc., and if you're trading, you'd pay attention to that kind of thing. It's not a great month, especially not if you're coming off a very, very strong December. Just your thoughts with where we are, Gautam. Are we ending something? Are we in the middle of something? Or are we just about starting something on the upside? What are your broad thoughts? Big thoughts, actually. Go on.
Good morning, Prashant. Well, I don't think we are ending something because I think we've been in this massive uptrend for about 8 years. As your team also highlighted, 8 continuous years of gains. So it just tells you that every single correction in the last 8 years have been bought into and the markets have come back every single time. However, as you rightly pointed out, I think the month of January does not have a good track record. In fact, out of all of the months of the year, it probably has the worst track record if you look at the last 25 years. At the same time, if you look at the months of November and December, it usually is a good period, and we've had a fabulous November and December. I think a lot of positives are already in the price. In fact, I would even go on to say that exuberance is in the price. So I think the market needs a fresh trigger to do something special, even from these levels. We are very, very overbought on the traditional parameters and on the breadth parameters. And obviously, if you add seasonality to it, these are levels where we don't think that the market can continue to gallop. In fact, in the last 10 days, you've had the Nifty stay in a 1.5% band. So 21,500 to 21,800 has worked quite well. And even if 21,800 gets taken out, you could see another 2-3% upside towards 22,200. But I do believe that the market is a little top heavy at this point of time, and the chances of a pullback at some point of time in the next few weeks is very high. So this is a time where one needs to be a little careful, one needs to be low on leverage, one needs to be conservative. And in case 21,500 were to break at any point of time, which I think is going to happen soon, you could see a pullback of about 3-4%, which I think is quite normal given the kind of run-up you saw in the last 2 months.
Chance of a pullback are very high, you're saying, but the market for now is not looking at that. The Nifty is up about 50 odd points. And plenty of stocks actually hitting fresh highs. Olectra Green Tech, a company that has been in the manufacturing of electric buses, has been doing very well. Great returns to shareholders. And that stock is at a fresh high now, 8% higher on Olectra Green Tech. So this market is definitely picking and choosing their winners, as has been the case in the last 6 months. Gautam, hi, good morning. Thanks for joining in. We have a couple of big events upon us, right? There is, of course, the budget. It's a vote on account, but nevertheless, it's an event that the market is looking at. There are the elections coming up. How do you juxtapose the technicals of the market with some of these big fundamental events? Do you think they could be game-changing, or are you still looking at volatility nevertheless?
Well, I don't think they could be game-changing, but definitely these are issues which the market will try to discount on a daily basis. And not just the budget. I think earnings itself, season is upon us. And I think that's also going to impact the markets because, as I said, a lot of the positives are already in the price. So I think I would just want to be a little conservative here. There are still immense opportunities in the market. I don't think today's market can be compared with anything that has happened in the last 20 years because the domestic liquidity angle has just changed the game and the entire framework completely. So I think what you're going to see is rotational correction. So pockets which are very overbought and which have run up a lot will go through its corrections, and pockets which have not done as well will continue to rally. In fact, our favorites in this market would be IT, pharma, metals, and chemicals. So these are the 4 baskets where we are bullish on and we are looking for opportunities. Even the banks, don't look too negative on the charts. I think the way HDFC Bank and SBI are placed, I just feel that the Bank Nifty will be safe, and that would actually lead to the entire market being safe.
All right. Hi, Gautam. Good morning and good to see you and wishing you a cracking 2024, Gautam. Tell us, but if you have to see a bit of a pullback on the headline index, that's on the Nifty, what could the quantum be? Where do you see us taking some bit of support?
I think, as I said, quantum and magnitude has changed quite a bit. Having seen the 2003-2007 bull market, 10% fall was quite normal. But I think in today's world, a 5% is a 10%. So in that sense, if the Nifty were to lose about 4-5% at any point of time, it should be considered normal and very, very healthy. So I think 21,500 for me is the line in the sand. If that were to break on a closing basis, you could see a bit of a dip. I think the only point which I'm trying to make is please do not take adventurous longs. I don't think medium-term and investment longs have any concern because the bull market is intact and you're going to see much higher levels. But in the interim, I think you need to see a little bit of a cool off. So 21,500 and probably 20,500 is the base because that was the number, which the market tested post the assembly election results. And I think that would now be the most important support, not just for January, but probably for the next couple of months.
Okay. You spoke about how banks could protect the market and prevent it from having this big fall, right? What about IT? We are heading into IT earnings as well, and it's looking tricky this time around. How are you positioned? Which side of the fence are you leaning towards?
Well, I would be positive. And in fact, we have been positive for the last few months now. And I remain of the view that the IT index is heading towards a level of 39,000, which I think is about 10% away from where we are right now. All of the top stocks, I think, look very well placed. Look at the rebound in Infosys and TCS. I do see TCS trading well above 4,000 very, very soon. And mid-cap IT has been a story in itself. I mean, if you look at all the top stocks, there is just no stopping. I mean, look at a Persistent, look at a Mphasis, look at a Coforge, Mastech. All phenomenal moves, and this is going to continue. So with IT and banks actually looking positive on the charts, it just gives me the feeling that maybe you'll not see a collapse, but you'll see a rotational correction in the market among various sectors.
Gautam, last week the Nifty real estate index went up 8%. Stocks like Sobha went up 30%. How is that one looking, and what are the best ideas in that area?
Well, Prashant, we discussed this a year and a half back, when I made the point that there was a breakout from a 10-year range, because post 2008 until 2021, real estate as a sector did absolutely nothing. It was in a big range. So when you have such big breakouts, the ramifications are also large. And that's really what has happened in the last 15, 18 months. Now, I think it's very, very overdone. I think just from a near-term perspective, you might have seen a buying climax, and the chances of a large cool off is pretty high. So we've been recommending our subscribers to actually take profits in many of these winners in real estate, capital goods, auto, and maybe move to some of the other sectors. Not to say that the uptrend has ended and the bull market has ended. You might get a resting phase in between that could last many weeks, maybe even a few months before the next leg up. So I think this is a buying climax. It should be sold into.
Okay, what about pharma? Started off 2024 in style. That was a surprise big outperformer last week, real estate as well as pharma. Do you think this year we could see the pharma index outperform?
It could be potentially a year for pharma. I think the structures are good. Many underperforming stocks have done well. I can give you 5 or 6 names. And I do see the pharma index moving towards a level of 19,000. That's the NSE pharma index. So there is large upside. And, the risk reward is excellent. Even at current levels, the downside is very limited. Look at the Divi's Lab, Dr. Reddy's, Cipla, Zydus Life. Very good setups. And at a 21,700 index, I'm actually very comfortable buying and, holding on to pharma for greater upside.
Defense has now become mainstream, right? After, being lying in the background for many years. So even as we speak, names like, say, BEML, Bharat Forge are all sitting at fresh highs. Do you see further gains in 2024 for the defense names?
I don't think so, Sonia. I think everything is being painted with the same brush. And I think there is just too much extrapolation happening in railway and defense. I do believe that it's very, very overdone. And these are levels where, when you are in gear 5, even a little bit of turbulence is sometimes difficult to handle. So defense, while it might be a great story from a 3 to 5 year perspective, but if you're looking to enter fresh, these are not levels. In fact, if somebody is bought at lower levels, take profits.
Okay. Well, all right, we will leave it at that. Thanks a lot, Gautam, for joining in. Appreciate your thoughts and the little bit of caution there in your voice. Let's see how things go from here. For now, very quiet, but Gautam Shah of Goldilocks saying that things may get a bit tricky, some bit of volatility, some pullback is definitely something that's on the horizon. For now, the market is volatile. The mid-caps are in the red. The Bank Nifty is in the red. The Nifty is soon to slip into the red. So I think the volatility is not over just yet. But let's talk about the ongoing conflicts in the Red Sea. Maersk has announced on Friday that it will suspend all shipping through the Red Sea for the foreseeable future because of the threat of attacks on its vessels. Freight rates have soared due to the Red Sea issue. To discuss the impact on India, Sunil K. Vaswani, the Executive Director, Container Shipping Lines Association, joins us now to talk about that. Mr. Vaswani, good morning and thanks a lot for joining in. Many industries are, under a lot of pressure because of what's happening with the shipping space and the Red Sea concerns. Just tell us, where are we at the moment? What is the situation on ground at the moment? And what is the kind of impact this is having on freight rates, on the industry overall?
Yeah, morning. As I mentioned the last time, that if things deteriorate, things could possibly get a little more concerning. And now, lately, as you would have known, the Maersk line vessel, Maersk, although they had announced getting back into the Red Sea, unfortunately, there was an attack on their vessel. And after that attack, they have suspended their services over the Red Sea for quite some time. I mean, it's indefinite till things improve. Quite frankly, the shipping lines have been, concerned with these attacks that are happening. And particularly recently, also, there was not only this attack, but also the US pulled out their aircraft carrier along with the 5 warships that were accompanying it from the Red Sea. Now, all this has left us in quite a vulnerable position, and we're left with no choice but to move over the Cape of Good Hope. Also, as far as the Indian government is concerned, I think the Indian government's efforts are very, very encouraging because recently they saved the Indian crew also of 15 members. But I heard some news items saying that the security to the Indian ships would be provided. I only hope that the same security will also be provided to the container ships, because container ships are essentially all foreign ships. and all the or practically all of India's exports and imports are carried
Sure.
by these foreign container ships. So that's
Mr. Vaswani, I understand, sure, I understand the situation on the ground. Can you help us with the rates? What are the shipping rates currently? How has it changed since, this entire issue started? If you could just help us understand, and also what is your own prognosis of freight rates?
Yeah, so the rates to the US have gone up by about 70%. If you recall, I had mentioned in my last interview also that if things deteriorate, the rates could go up by about roughly 80%. So to the US, they have already gone up by about 70%. To Europe, I'm afraid the rates have increased more. They're more than doubled. In fact, almost tripled to Europe.
Wow, that is very, very large, right? And this issue
Yes.
is what, a month old
Yes.
now, right? So you're saying 70% hike in container freight rates to the US, and Europe has doubled basically.
More than double, almost close to triple.
And this is from which ports here in India?
I'm talking about essentially Nhava Sheva and Mundra.
Two ports like, I mean,
The European ports, North Continental ports, Mediterranean, and then when you're talking about the US, is essentially the US East Coast.
okay. Could you tell us, if and just one more thing, sir. Taking the route via the Cape of Good Hope. I was talking to some people in shipping, and they were saying that not only is it longer, there's an issue of longer. There's also it's a much tougher route because the seas are much more difficult to navigate. So containers go overboard, etc. So other costs like insurance costs, etc. also rise. Could you explain that? Yeah.
Absolutely. As I mentioned the last time, that the costs include insurance costs. They include the costs of chartering new ships because we are putting in additional capacity. So at least on the service, when you're going over the Cape of Good Hope, your transit time increases by a good 10 to 12 days. And for that, if you have to maintain that service, a weekly service, in a weekly service, say about 7 to 8 ships are put into the service. But that's when you're moving over the Suez Canal. But when you move over the Cape of Good Hope, because the transit increases by a good 10 to 12 days at least, you need to add at least another 2 ships, if not more, onto the service. So for putting in those 2 ships, the cost is more. The ships cost you, the charter hire goes up, not only because of the number of additional days that are involved, but also the demand for the ships. So the charter rate also has gone up.
Okay. Now, in the container business, how much is how does it typically operate? Are these do they all operate on a day rate basis? Are these long-term fixed price contracts which then will reset? How do the bulk of it operate?
See, it all depends line to line. They have their own systems. But as of now, because this is a kind of an emergency situation, the lines, those who have additional capacities are putting in their additional capacities, which also costs money. And on the other hand, those who don't are hunting into the market for chartering ships. And because they're hunting the market, the charter rates have gone up as well. So this all is adding to the cost. And also, if I may say that the buyers, the buyers of Indian commodities have, as of now, many of them suspended their buying because of the rates having gone up. But this suspension we don't see long term, because eventually if the trade adjusts by itself to the situation. So eventually when their stocks also start depleting, they will start placing orders, and the supply chains will get used to the longer transit because they will place the orders that much earlier.
Okay. In fact, I wanted to ask you about that. What is the, impact that this higher rates are having on industries? I mean, whether it is, say, the auto sector, whether it is textiles, a whole host of industries actually. Where are you seeing the maximum hit? Where have the orders been suspended the most as of now? And in terms of a timeline, what are we looking at? I know it's very hard to predict, but what are you looking at?
See, commodities, export commodities like steel, engineering goods, pharma, chemicals, textiles, agri products, they've all been impacted. But what I can tell you is that the commodity market, like agri products, or some sort of chemicals and plastics, those exporters have shifted to the domestic market. They are focusing now on the domestic market. As far as exports are concerned, the reefer commodities are most impacted. Like right now, we have the grape season. So the grapes normally move over to Europe via the Suez Canal. But with the longer transit, these are perishables. So it's a question mark if they'll be able to withstand the longer transits. So those, of course, are getting impacted.
Mr. Vaswani, so your prognosis last time we spoke has come true, right? With the increase. Do you think they could jump, rates could jump more? If you remember back in, I think mid-20, maybe 2021, right? We'd seen container rates go up, but that was a different situation when the world was opening up after COVID, etc. We had container rates going up 300, 400%, maybe more in some cases. Do you think this could get anywhere close to that, or this will be contained here? What's your sense?
Yeah, so I don't think it would be right to compare the situation now with the situation during COVID or immediately post-COVID, because that was a difficult situation, a more difficult situation, I would say, and everybody was totally unprepared for it. So even the capacities were not available. Right now, fortunately, we have the capacities more or less by and large available, but only thing is there's a cost involved to it, because obviously there's the demand and supply, the market goes up, charter rates go up. And as even the Indian exporters have agreed that there is no disruption. Initially, when COVID hit us, there was disruption to an extent, although everybody was trying to put the supply chains in place. But there was definitely some amount of disruption. Right now, there's no disruption. It's only the increased transit and the cost that's gone up. So as I said, that the market and the buyers also adjust themselves to the overall cost and to the longer transits, thereby placing the orders beforehand. So there's a difference. There is no disruption as of now, which is a major advantage that we have. It's a silver lining on the cloud. It's just that the cost has gone.
Absolutely. That's important to understand, and thanks for explaining that to us. I just wanted to understand one more thing. So India is now using some alternative routes as well, right? As we discussed, the Cape of Good Hope route, etc. But that would mean higher energy costs, higher insurance costs, maybe some piracy, safety costs, etc. that are involved as well. So just tell me that if this route is used more and more now, these alternative routes are used, apart from the higher shipping costs, what are the other ancillary costs that would go higher for companies that are exporting?
Yeah, the fuel cost definitely goes up because of the longer transit. The charter higher, as I said, because of longer transit, the charter is normally charter rates on a day basis. So if it's 10 to 12 days more, it's going to cost you that much more. And the charter rate goes up because of the demand. And of course, the insurance also costs because of the longer transit, the insurance cost goes up. But these are unavoidable. In fact, as far as the cargo is concerned, if I may just explain a little bit more, for cargoes moving over the Suez Canal, the Red Sea and Suez Canal, I understand that many of the insurance companies have stopped insuring even cargo. So the exporters, even if they want to ship over the Suez Canal, the insurance companies are reluctant to insure their cargo. So that also is hitting them as far as exporters are concerned.
Got it. So, I mean, with the situation as is, do you think this, of course, everybody will adjust to higher rates, that will happen, but they'll adjust at much higher rates, right? Costs will go up to the extent where, with what's happened to shipping, etc. So I have two questions. In your opinion, which are the industries which will get impacted the most? And which will be, and which are the ones which will be able to take it in their stride? Indian industries, which you think, both via exports or imports? And second, do you think the situation will last for as long as the conflict in Gaza continues? Or do you think it could be longer? Go on.
Yeah, I mean, definitely, as long as the situation in Gaza continues, this is likely to be impacted. But as I said, that it all depends on if the situation improves. If the Operation Prosperity Guardian, increases, their presence in the Red Sea, and if the Indian government also continues to protect ships, not only the Indian ships but also the foreign container ships, then the situation would not be as serious as one is fearing it to be right now. So it's all a wait and watch. Also, as I say, that in every situation, there is also an opportunity. So in this situation, there's also an opportunity for Indian exporters to look at new markets. I believe the Latin America market provides some sort of an opportunity for Indian exporters. Also, although the volumes will not be as large, but that's an area to look at. Also, Australia is another area to look at. So some of the other markets in the meanwhile, I'm sure the exporters also know this and they are focusing also on these markets. So these are also opportunities in the meanwhile that the Indian export community could look at.
All right, we will let you go on that note. It's tough times actually across industries. I mean, just when they thought the COVID situation was behind us, now, you know, this whole Red Sea issue has come through. So it's been tough for businesses across the board, but hopefully things should settle. Thanks a lot for explaining the situation to us. So shipping rates, container freight rates have surged 70% to the US and doubled to Europe. Some have tripled from ports like Mundra because of the Red Sea conflict. Not looking good at all for several industries that export. Let's slip into a quick break. The market is under pressure, by the way. Don't lose sight of that either. The Nifty is down about 56 points. Mid-caps are down almost 300 points. When we come back, Satish Vag, the Chairman and Managing Director of Supriya Lifescience, will join in to discuss an outlook on their 2024 business. We also have Vivek Lohia, who is the MD of Jupiter Wagons, to discuss their business outlook. Stay tuned.
Well, on the sidelines of the Tamil Nadu Global Investors Meet, my colleague Jude Sanat spoke to Mr. Sinha, the MD and CEO of Tata Power, about the solar and wind projects in Tamil Nadu. Let's hear out to what he had to say.
We already have nearly 500 megawatt of operational plants of solar and wind, and another 1,000 megawatt of solar and wind is under execution in different places in Tamil Nadu, which will come up in next 12 to 18 months. Apart from this, we are setting up a large manufacturing plant for solar cell and modules. This is in southern Tamil Nadu in Tirunvalli, and this is a 4.3 gigawatt of solar cell module, which is in very advanced stage of construction. Initially it was a 4 gigawatt, now we have gone for expansion, and the MOU will also be there for the expanded capacity. And apart from this, we are also exploring opportunities to set up more of solar and wind plants over here. Tamil Nadu offers great opportunity, especially for wind projects, because there are certain pockets where there are very good wind speeds, and we are looking at those opportunities. Apart from that, we are looking at some of the solar opportunities that can become, so that we can offer hybrid solutions to the consumers.
Yeah. Leaving the exploratory opportunities aside, insofar as the projects that you've confirmed with the Tamil Nadu government, what kind of an investment outlay will you be looking at?
So the manufacturing is 4,300 crores of investment, which is already ongoing. There is another 3,000 crores of plant that is coming up in terms of the solar plant, and another 3,000 for wind. So there's about 6,000 of the solar and the wind generation investment that has been made, and another 4,300 crores of manufacturing. So it's, you can say about 10,000 is already work in progress. We see huge traction and opportunity for all these girls who are coming from that area. We've already onboarded nearly 1,000 of them, and we feel that this will create a lot of local employment and entrepreneurship opportunities for people around the plant.
Right. Looking beyond Tamil Nadu, so even as 2024 is just about started and we're looking at summer months approaching in about 2-3 months now, what is your outlook for the year? Coal prices have been going up. There is, of course, also talk about coal stocking itself. How do you see the new year panning out really insofar as the power sector is concerned?
So I think the power sector has seen tremendous growth in last 2 years. Every year there has been a CAGR of nearly 10%. And the demand of power has increased primarily because a lot of industrial activity has picked up, new manufacturing plants have been set up, a lot of commercial and activities have picked up, including the residential consumption has gone up. So I generally expect that the 10% growth that we saw last 2 years may continue in this year, and I think the Indian power industry will be able to generate enough power and supply to them. We sometimes have little challenges, but I think Indian power sector has done exceedingly well in last 2 years to meet the overall increase in demand that has happened.
All right, well, that's Tata Power, but let's talk about Aarti Industries that is in focus this morning. Sonal is here to tell us why she's tracking that one. Sonal, over to you.
Thank you for that. Well, remember, Aarti Industries entered into a long-term contract for an advanced intermediaries for an agrochemical major last week itself. They said they'll be getting around 300 crore rupees over 9 years. But now there's a setback that has come by because European Union has not renewed the license for a product for which Aarti Industries had to make this advanced intermediary for. So just to put it into context, the European Union has decided not to renew the approval of S-metolachlor, which is an agrochemical, and this is a product for which Aarti Industries last week won a contract for in terms of advanced intermediaries. So Equirus says that there could be diversion of volumes from European Union to other markets, and this will put pressure on the advanced intermediate in terms of volumes and pricing as well, and that means Aarti Industries will not see the volume offtake which it was expecting earlier because of this renewal that has not come by, because a big market in terms of European Union has gone away with this approval which has not come by. Now, UPL is one of the bigger producers which makes this final product. So that stock is also in focus because the European volumes will come down because of this. The Equirus also says that long-term contract of Aarti for the supply of the intermediate is also at risk and volume offtake would be lower. So yes, while they did win the contract last week itself, the volumes are going to be lesser than what they were expecting. And UPL also, the volumes will be lower for the final product. And that's why both these stocks are lower in trade.
Right, 4% lower in Aarti Industries, 600 around is where the stock is not trading. So thanks very much for that. Godrej Consumer and Marico are also weaker. Let's revisit that with Mangalam. Mangalam.
Well, you know, both these stocks are lower by almost 5%. The common theme between both Godrej as well as Marico is the fact that their revenues in the third quarter will decline. But that's where, you know, the commonality ends, because for Marico, the internals are slightly weaker than that of Godrej Consumer. For Marico, the consolidated revenue declined in low single digits. Domestic volumes themselves grew in low single digits, and that was on account of weakness in their Parachute, Saffola, as well as value-added hair oils portfolio itself. The portfolio that did well for them were the foods and premium personal care. They expect gross margin and EBITDA margin expansion too. For Godrej, the reported revenues will be lower, and that's largely because of currency impact or currency depreciation in Africa as well as LATAM. But apart from that, the constant currency revenue growth will be closer to double digits. Their volume growth will be mid to single digits. And in India as well, the reported volume growth will be in double digits, even though organic volume growth will be mid-single digits itself. Operating environment in India has been similar to that of the second quarter. The other positive for Godrej Consumer has been the Indonesia business, which reported double-digit volume growth and high single-digit sales growth as well. They too are likely to show EBITDA margin expansion, but the fact that reported revenue growths will be lower for both Marico as well as Godrej has the street spooked, and as a result of which both those stocks are lower.
All right, Mangalam, thanks a lot for that. Well, let's focus on Supriya Lifesciences. Now, the company's manufacturing site in Maharashtra has received a good manufacturing practice certificate from the Brazilian Regulatory Authority. To discuss this, what's the way ahead as well, we're joined by Mr. Satish Wagh, the Chairman and Managing Director of Supriya Life. Hi, Mr. Wag. Morning. Thanks so much for joining in. Well, earlier when we spoke about conservatively, you were guiding for around a 22 to around 24% revenue growth for the year. And I think broadly, you were talking about 570 crores. Now, we're getting in towards the end of the year. For FY24, what kind of a revenue growth you're looking at? Because the first half you've grown fairly well. Growth as well as margins, what are you looking at? And also CRAMS, that's going to be the growth driver, say, from 2026 onwards. So how do you see that business ramping up?
Sir, thank you very much for connecting me. As far as Brazilian Anvisa is concerned, I'm very positive and very happy to say last 2 years back, the Anvisa started the new regulations that for last 4 decades, China was only supplying the APIs to this market. Then they came up with the GAP certificate and then Supriya immediately picked in and we already have registered 10 APIs out of 15. And I'm hopeful within next 2 years, we will achieve at least 300 crores more in Latin American market, especially in Brazil. And Brazil, Anvisa has an edge on the entire Latin American markets, and that also will penetrate more and more. And we continue with a positive growth this year also and next 2 years also.
Okay, just to clarify some numbers, sir. So for this year, what do you end at in terms of a growth rate? Can you do closer to around 30% instead of the mid-20s that we were talking about earlier? And margin number as well?
Sir, as far as we concerned, Supriya, we always talk on the percentage of EBITDA. That is the crutch of our balance sheet. So I definitely tell you this year we will definitely have between 15% what we have done in last year, but EBITDA margins will continue to remain the same. And within next 2 years, the new therapeutic categories which we are coming, we will definitely find a way and penetrate more and more in the regulatory market. Currently Supriya is 43% in European markets. We have lots of CEPs coming in this market, which will give more and more value addition. And I personally expect that EBITDA is must.
Mr. Wag, you said 20% earlier, right, when we spoke last time. You're saying a 15% growth now. So are you scaling your growth estimates lower?
Yeah. See, as far as me is concerned, I always say that whatever we are going to achieve, I always say less. But positively, we will do our best and we will achieve more. That's my say. I'm a little conservative on says, but we will do it.
Okay. Can you tell us, particularly in the CDMO market, what is the kind of opportunity that we're looking at? What are the customers in acquisition? What's the potential revenue over the next 2 to 3 years?
In CDMO market, we have recently and we already have announced that we have joined hands with DSM. DSM, one of the vitamin is totally getting sourced from us and they will be closing down the plant at Switzerland. So that's one which has come from the CMO and CDMO activity. We are also working on the 2-3 products which protein is there. We have already signed with the American company where whey protein is coming up. And the whey protein is a technology patented, which we have a rights of 20 years. It's a commodity product, but largely getting consumed in India. We are going to concentrate more and more in exports than the consumer market.
All right, Mr. Wag, you're saying that the Latin America opportunity could be huge for you. Earlier, China was supplying. Now you believe a company like yours can benefit out of there. You also have additional capacity that's coming on stream. And you're talking about scaling up the CDMO opportunity. So let's take a 3-year horizon. In the next 3 years, last year you delivered a revenue number of around 470 crores approximately. 3 years from now, can your revenues more than double? If yes, if you could tell us what could the margin guidance be as well. Please go ahead.
I am quite confident we will double within next 4 years. And our the percentage, that's EBITDA, that will continue. We always concentrate on margins and EBITDAs. And that company has an edge in the European market as far as Latin America market is also there. And we will continue the best in this area because, I told you, 4 to 5 decades, China was only supplying. This year, when we decided to go for Anvisa, we have requested Anvisa to come and audit our plant. And we are very happy with 0 findings. We have cleared the audit.
So FY26, you will double your revenues, correct?
Yeah.
All right.
Even
we'll leave
one
it there.
of the customer from Latin America has come forward with roughly around over 200 crores, 2 APIs, which we have already signed a CMO and CDMO activity with him. And I'm sure that particular customer will be buying more than 200 crores with a better margins.
All right, we'll leave it there, sir. Thank you very much for joining us, and I think we all appreciate your conservativeness, as you said. So stay conservative and then do better. I think that's the way to go. Appreciate you joining in with all of that.
Thank you very much. Thank you very much,
once again. All right, well, let's focus on our big winners of 2023. Jupiter Wagons is one such name. The stock is up to almost 250% in the last 1 year. We have Vivek Lohia, Managing Director of Jupiter Wagons, joining us now to discuss, what business looks like beyond FY24. Ms. Lohia, good morning. Great to have you with us here. Thanks very much for your time. Prashant this side. The last time we spoke, you had told us that by the end of FY24, you should be up to about 800 wagons a month. Could you tell us what is the status right now, and how's that plan going into FY25 as well?
Good morning, Prashant. Thanks for having me in your channel. As you rightly said, that we had mentioned that we will go up to 800 wagons, and we have been always very conservative in giving our forward numbers. So we are already now this month we are close to about 850 odd wagons, and our target is that before end of FY24 we would be touching about 1,000 wagons a month.
Okay, 1,000 wagons per month before the end of FY24. Got it. You also received a fresh order from the Defence Ministry. Can you tell us a little bit about that? What is the order execution timeline? When will it start to show up in your books?
So the execution will start by end of FY25 and it will go over FY26. This is a continuation of, we are already producing wagons for the Ministry of Defence, and this is a continuation of that particular design of wagons. So it is for us, in that manner, it's an order which is very easy to execute. And what we understand is that the Ministry of Defence is looking to further procure wagons to meet its requirements, and we are fully geared up for the same.
So can you tell us what is the exact number? I understand that this particular order is a little less than 500 crores, but what's the total order book that you're servicing from the Defence Ministry, and what is the order opportunity looking like, particularly from Defence over the next 12 to 18 months?
Yeah, so this particular order which we got is about close to 400 odd crores, and we have a earlier order book of similar numbers. I don't recollect the exact order book value, and what I can understand from the Ministry of Defence is that, again, very difficult to give exact numbers, but they are looking to further enhance their fleet in FY25 as well as FY26.
Okay, all right. Hi, Vivek. Morning. Thanks so much for joining in. Your cash flows continue to remain negative, though. When do they turn around?
No, I wouldn't say that. The cash flows are positive, and as our revenues go up and our EBITDA margins keep on increasing, we will be adding incremental cash flows. And the idea is to use those cash flows to further propel our growth. So we are looking over the next 2 years, we are looking to invest close to about 1,200 crores in terms of additional capex. We have recently done a successful round of QIP where we have raised about 400 odd crores.
Okay.
And the idea is to, make ourselves much more stronger by doing substantial backward integration, not only on the foundry side, but as well as on wheel sets, because we definitely also see an export opportunity there. And in FY25, you will see a significant execution in terms of our brake business also happening.
Okay, so the cash flows turn positive from now on, right? First half of the year was negative, so I asked you that.
Yeah, no, it is positive. Okay.
Got it. All right. Let's give us some guidance then in terms of growth. Order book is looking good. Business potential is great. What kind of a revenue growth number should we be looking at for FY24, 25, 26 from here on? And also, if you could give us a brief number in terms of profitability, which would mean margins.
So again, we are not in the business of giving forward numbers, but as I mentioned that in terms of our wagon execution capacities, we are significantly increasing execution. So over the current financial year itself, you are seeing around a close to 40% increase in terms of our wagon execution capability. That itself, again, you will see in terms of revenues, especially in even in FY24 and again significantly in FY25. As our whole idea is that, as we grow in size and we become much more cost efficient, through backward integration and through delivering better quality products. Definitely, our EBITDA margins are going to increase on quarter, and you have been seeing that happening over the last 1 year, and that trend I think will continue. The brake business again will be a significant contributor for that. We are now close to launching our electric vehicle, and we are expecting ARI certification this month itself. So around April, we are looking to launch that. So that will be again a significant new product in our bouquet.
All right, thanks a lot for joining in and all the best. That's Jupiter Wagons. They have a current order book of 400 crores from the Defence Ministry, and they've just recently won an order of about 470 crores. So they're doing lots of things in that space. The business is growing well, and so is the stock. But Mitesh Thakkar is back with us to give us his views on the market, which, by the way, it is under a bit of pressure as we speak. Not too much, to be honest, just about 30 points lower. Mitesh, getting a bit jittery now, this market. How are you positioned for the rest of the day, and what are the stocks to look at?
Yeah, so I think, basically it is still the part of the movement of which is, turning out to be a range-bound consolidation. So I think, you will have this kind of ups and downs. I would still want to buy it once the Nifty is closer to 21,500 and take a 50-point stop loss from there and then see how it goes. On the stock side, I have a buy on Manappuram. I think, that's the stock which is doing well and could possibly see some follow through during the day. So recommend a stop at about 174, target of around 185 can be looked at. While on the negative side is PVR Inox. That's broken down today early in the morning. Keep a stop at 1640 and look for targets of around 1580, 1575.
All right, Mitesh, we'll leave it there. I want to throw more stocks at you, which I'll do in a little bit from now when we have you back. Thanks very much for joining us here on the program. We'll take a quick commercial break here. Manisha will be here and she'll put the focus on the commodity space. Stay tuned, that's coming up.
All right, it is a bit all over the place for the market, but there is a red hue. So we'll keep it aside for now and look at the commodity space. Manisha Gupta is joining us. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the index, and that is the FAO Food Index globally that looks at a lot of commodities, and we have seen a surprise decline onto that one, continuing for the month of December as well. So we have seen an easing on a month-on-month and an year-on-year basis as well. So when you look at the numbers itself, well, this has been one of the biggest declines that we've seen in many years there. When you look at a month-on-month basis, in the month of November was 120, and we're trading at 118 is how December closed. As compared to last year, it has been a big decline, as you can see, to the tune of almost 15 to 16 points there. That is a 10% decline on an year-on-year basis when you look at the food index global markets there. The overall numbers also are quite supportive here. The FO averages the kind of decline that we have seen has been the biggest annual drop since 2015. And as I said, starting from January on how we ended December 2023, it has been a big 10% decline in overall food prices there. When you look at the year-on-year number, last year was 143 of an average. This year is 120 there. I also want to bring in a breakup of what we have done in sense of food prices in this current year until now. I'll start with cereal, and that has seen a gain of 1.5% on a month-on-month. But for the year, we have seen a 15% decline. Within cereals, it has been about maize, rice, and wheat. All of these commodities actually have been in the positive in this year, and that's the reason you have seen that month-on-month increase as well. When it comes to rice, well, this is where the major concerns are. All the Outlook 2024 reports that you will read, rice clearly continues to be a concern. So month-on-month, we're up by 1.6%. Year-on-year, we've seen rice prices gain up by 21% as well. Vegetable oil clearly was not a concern for inflation. Month-on-month, down 1.5%. And year-on-year, we're down by 32 to 33%, even 42% for some of the vegetable oils there. Sugar has been a concern. We did see prices go to a 15-year highs in the month of November, but December closed with a big amount of profit taking, so 16% of a chunk decline there. Year-on-year, 15% on the higher side still. So sugar prices continue to stay on elevated levels there. Dairy hasn't been a concern really because we've seen 16% of a decline globally there. Meat clearly on one side trajectory, which has been on the lower side, 1% down week-on-week, month-on-month, and 2% down on a yearly basis as well. Markets do believe that it's going to be really about cereals, wheat, rice, biofuels is what is going to be in focus in this year as well. Apart from everything else, it's going to be an easing inflationary pressures there.
All right. Manisha, thanks very much for that. That's basically what's happening with commodities. We'll take a quick commercial break here. On the other side, our special segment, Outlook 2024. My colleague Lata will get chatting with Abhishek Lodha, Managing Director and CEO at Macrotech Developers, to discuss the outlook for the real estate sector in this year, key trends, both premium and affordable as well. Stay tuned, that conversation up next.
That is true. No, I mean, it's just that. Well, real estate companies have been grabbing headlines with a stunning show. Just an hour back, DLF announced it has sold all the 1,100 units of luxury apartment that its Arbor 2 project in South Delhi in 72 hours. Last week, Lodha developers announced that in their 9 months of FY24, they have surpassed their business development target for the full year. Indeed, luxury housing has done fabulously well in the last 9 months with a 115% rise. That's ANAROC figures for the first 3 quarters of the current year. So how will 2024, calendar 24 pan out, and what's the ask from the budget? I have with me Abhishek Lodha, Managing Director and CEO, Macrotech Developers. Abhishek, thank you very much for joining in and dropping into our studio.
My pleasure, Lata.
Okay. Well, that really is the first question. You know, it looks like luxury has done very well. How did premium do in 2023? What's your overall takeaway from 2023?
Lata, generally 2023 has been a good, strong year for the housing market. Obviously, the luxury market, because of the bigger numbers involved, makes more headlines. But the reality is that the entire pyramid is operating, and it's fundamentally driven by the fact that there is job confidence in the country and there is income growth happening, and consequently people want to lead a better quality of life. You know, at some figures, our estimate says that there is a need for 100 million homes in India over a decade, and the maximum supply that we can do, even if all developers put their maximum effort together, is less than 10 million units. So there's a huge supply-demand gap, and therefore I think we are, a long way to go.
No, that is the overall picture. But in 23 itself, what we got from the ANAROCs and the Knight Franks and the JLLs is that mid and premium have done well, but not affordable. Can you tell us a little more about mid? I mean, in the, say, sub 3 crore category, our sales, I don't know how you define mid, right, but luxury quite clearly has done very well.
Yeah.
What about the mid?
Yeah, so I think ANAROC is right in saying that the affordable entry segment, which are homes between, let's say, 30 lakhs to 75 lakhs, are the ones which have performed the least well. They're still grown, but the least amount of growth. And that's really driven by the fact that for no fault of theirs, interest rates suddenly spiked by, 200, 300 basis points. That clearly puts a load on the entry home buyer because they are very, very constrained. And it also reduces their loan eligibility. So, as interest rates have now started flattening and hopefully will come down over the next 12 to 18 months, we will start that segment because there's a lot of pent-up demand there. It just is that there,
You will start even in the under 1 crore?
Yeah, yes.
In Bombay itself?
I think across the country, that is a segment where you have the maximum amount of increase in demand. It's just that, people are waiting for the interest rates to get a little bit better in that sub 1 crore segment so that their loan eligibility increases, because the amount of loan they can get is a function of their salary, which is doing well, but also the interest rate. So the interest rate has to moderate a little bit before they can get the loan amount that they need for the home that they dream of.
8-9% for a home loan is what we have lived with for the last 3 decades. It was only in that, COVID period that we got used to this sudden 6.5-7%. So I guess getting back to that will look very, very tough. But versus mid versus luxury, how is the split happening?
As I mentioned, luxury grabs the headlines, but the fact is that the demand across the board is quite strong. I think, different people will have different figures, but the fact is that the industry across different price points is growing quite well.
Okay. Now, let me come to the numbers that you announced to the exchange itself. There has been a quarter-on-quarter decline in bookings and collections. Is there something we should worry about?
I don't think we look at our business on a quarter-on-quarter basis. There is a fair amount of seasonality in the real estate business. For example, this quarter, Shraddh, which is an inauspicious period, is particularly for certain communities, moved in the first half of October. Typically, it comes in the end of September. Now, you can't even, therefore, you can't compare either quarter-on-quarter or year-on-year. But having said that, I think, we look and guide our investors on a full-year basis. On a full-year basis, we had guided to 20% growth, and we feel pretty good about delivering on that 20% growth.
Well, among the bigger real estate, Soba managed to show an increase quarter-on-quarter, despite Shraddh. Now, what about the, you said that your business development is over 20,000 crores in 9 months itself versus an expectation guidance of 17,000 crore. What exactly do you mean by that business development? And therefore, will you also upgrade your, pre-sales guidance?
So Lata, business development means that the projects that we've added, what is the estimated sales that will come from the projects that we've acquired in this time period. We're guided for a full year number of about 17,000 crores. We've done about 20,000 crores already in the first 9 months of the year. This operates typically with a 12-month lag because by the time you acquire land and take it to market, it's a 9 to 12-month cycle. So yes, definitely it helps, sort of provide more visibility for the coming
year.
Yeah.
Okay, okay. And so now that you've already done 20,000 crore versus a full year target of 17, what may be the full year for the current year itself?
I think, Lata, we generally sort of, want to make sure that we deliver on our guidance or slightly exceed it. On this one parameter KPI, we've done it. We're not changing any guidance. But I think what it's telling us is that in spite of the fact that the housing market has been performing well, land supply is available for top developers where the partner who's selling the land or is doing a joint development on the land feels that they will be well treated in the process. So what I think we can understand from this is that there is plenty of land available for sustaining the growth of the sector in the years to come.
So your pre-sales guidance of 14,500 crore also you will, overachieve?
I think, Lata, like I said, our goal always is to deliver on guidance or to do slightly better than that. And I think that's where we look headed to for the full year.
Okay. What's the sense you're getting about margins? Have building materials become expensive or land become expensive, or will you be able to actually improve on margins?
So at an overall basis, this year we will see a slight uptick in margin on a like-to-like basis. You may know that on an owned land, you make higher margin because you make a higher investment. The ROE is lower, and that's the other way around when you do joint development. So generally, I think there has been price growth of 6 to 8%. We like that level of price growth because it is good for the existing buyers, but it is below wage growth and therefore improves affordability. At that level of 6 to 8% price growth, you also get margin expansion because total cost growth tends to be around 4 to 5%.
Okay, so short point, your margins can improve, you're saying?
Yes.
Okay, okay. How are prices, proceeding? How much could you raise prices in the quarter gone by? And what does it look like in the current quarter, the pace of home price growth?
On an annualized basis, Lata, we had guided at the start of the year to price growth of between 6 to 8%. We like price growth to be a little south of wage growth because India's story is a volume story. There is a lot of growth in housing volume that can happen and should happen as India moves from a low-income country to a mid-income country. Now, the way that happens is if affordability keeps getting better, and affordability is a function of salaries versus price growth, and of course of interest rates. I think interest rates are going to perform and help affordability over the next 2 years because they are, I think, peaked. If price growth remains south of wage growth, you're going to also help that factor improve affordability, and consequently you can continue to see volume growth.
There is enough confidence that interest rates have peaked, but whether they will fall is still a matter of doubt. So much will depend on the world as well. You have your facility management business which gives you an annuity income. Can you give us some idea what's the current size? Are you looking at that to be scaled up? If yes, how much?
Yeah. So Lata, as a company, what we are hoping to do by fiscal 26 is that whatever limited debt, because our debt has come down quite a lot and will continue to come down, but whatever limited debt we have, the servicing of that can be covered by our annuity income stream, so that effectively our development business has no debt at all. And that is a very, very de-risked, low-risk way of operating in our view. So our facilities management business, the rental income we have from certain offices and retail developments, and our share of income from our joint venture that we have for doing warehousing, all three combined together should be providing about 500 crores of net income by fiscal 26. And that will cover all our interest expense in that year. And that, I think, makes our business a lot more resilient. Because while we have a confidence this is a 15-year cycle, we are only now in 2024 in year 4, there will be, some black swan event, there will be something which will go wrong. And the lower the risk on the balance sheet, the more stronger the likelihood of outperforming.
You took away my next question, which was, where are we in the real estate cycle? Okay, we are in the 4th year of what you see as a 15-year cycle. Is that right?
That's correct.
Okay. Now, if that is the case, can you give us a more near-term, since you took away my longer-term question, near-term, how does this look? Like in 2024, what would be the big numbers for the industry? Will it still be luxury and then mid and then affordable? Any numbers at all that you all are looking at as an industry?
I think at an overall aggregate level, we expect that the industry will grow at about 20-ish%, which is a lot of growth for an industry which is fairly large. 15% volume, 6, 7, 8% price, that kind of mix. The top companies will do as well or better than that. But I think what we don't understand fully is the second order effects of housing, because so much employment gets created directly on the construction field, and then the entire supply chain, 400 plus industries depend on housing. So when you saw the GDP numbers come out a few days ago, you saw that construction was the biggest driver
10.7%
of why our GDP is doing as well as this has. And this has been historically the case. Whenever a country moves from low income to mid income, housing drives that growth and housing benefits from that growth. It happened in the US after the Second World War, 20 continuous years of housing growth from 45 to 65. It happened in China from the mid-90s to the middle of the last decade. And the next 2 decades, I think, this decade and the next one, housing is going to drive the economy and is going to benefit from the growth of the economy.
Okay. In that case, you will have something to ask of the finance minister. Well, just to tell our viewers, we have already given Abhishek a bunch of cards to write his budget wish. As you can see, there is the budget ballot box sitting next to him. So, well, before you cast your vote or cast your budget wish, what is it that you want by way of policy from the budget or even otherwise?
Lata, I think, as I said, housing has such a huge multiplier effect on the economy. So to sustain our growth, it's very important that the volume of housing keeps increasing and growing. And therefore, today, when the affordable segment, as we discussed, is today gotten hit by interest rate increases, which they had nothing to contribute to, we need to support them in getting onto the housing ladder as soon as possible.
Yes.
So whatever the government can do to put more money in the hands of the entry-level buyers, those who make between 5 to 15 lakhs a year and are the entry-level buyers, would really have a cascading multiplier effect on the economy. And I hope that the Honorable Prime Minister and the Honorable Finance Minister can think about this and support the home buyer getting on the housing ladder as early as practical.
So more income and less taxes for that.
Whatever gives them more net income.
Okay. Well, that's a great one. Just a final question on your own big headlines for the current year. I mean, will it be Palava? Will it be Thane itself? Or will it be